This is the story of Goldilocks and the three banks. Once upon a time there was a young Australian community, let's call it Goldilocks. Goldilocks was walking through the financial services industry forest and came across three banking structures. The first banking structure was formed through necessity. After Australia's federation, the nation needed funding. Business and economies are notoriously asked about. You need money to make money, so you need someone to give it to you up front, and that's where banks come in. Accordingly, state and federal governments established banks through statute with the purpose of enabling the fledgling Australian economy to grow and prosper. This gave birth to a string of significant Australian state-owned banks, including the Commonwealth Bank, Bankwest over here in WA, former RNI, and State Bank of Victoria. The second banking structure didn't start out as a banking structure at all, as legally they weren't allowed to be banks, and that was the mutual co-op or member-based structure of building societies, credit unions and the bigger life offices. They still offered services such as deposits and mortgage lending, but not the full banking suite. Their reason for existence was to benefit their members, who are also their customers. Profits were not important, as they'd be returned to the member customer through reduced fees, services or bonuses anyway. It was all about customer service. Prime examples were St George Building Society, Perth Building Society or Challenge, and AMP. The third banking structure, corporates, is where the owners of the banks are shareholder investors. From pre-Federation times, corporates have provided financial services to Australians. The corporates are governed under the Corporations Law, and boards of directors must make decisions in the best interest of the company, which practically means shareholders. What do investor shareholders want? Return on their capital. How do boards achieve this? Profit. Don't blame the directors, it's the law. So the prime examples, Westpac, or the former Bank of New South Wales, National Australia Bank, and ANZ, which was merged out of three English banks. Goldilocks had the choice of three banking structures and tried each of them. Which one was just right? Well, today we have zero state banks. Some big losses, you might remember Tricontinental hurt politically, and sale proceeds supported government budgets. Privatisation also benefited mum and dad investors. Anyone invested in Commonwealth IPO yielded a 7,000% return if they held it for 25 years. Mutuals have more than halved through mergers and adoption of banking licences, with members benefiting nicely via publicly listed shares. For example, AMP's listing is worth a lazy $20 billion in 1998, which leaves us with a banking structure that Goldilocks found just right. Corporates, which is 40 times bigger than the mutual sector today. The moral of the original Goldilocks story is that self-interest has a cost. The Royal Commission has shown that maybe the corporate structure is not just right after all. It will be interesting to see if Commissioner Hayne can suggest structural changes that provide benefits to the community, customers, as well as capital. And if your business needs to understand its purpose, Pivotal Point is happy to help.